A brand new report shows us that inflation is just getting started. Now, I know they're telling you that inflation has peaked. It should be going back down. Of course, it went from being transitory to now it's peaked. And now, of course, the Fed has a handle on it. But a new report shows that that is not the case. And as a matter of fact, this new report shows us what to expect in the future. So I want to break it down. I'm going to show you what this new report shows. I want to show you what the number is. And I'm going to explain to you, I'm even going to give you a little drawing to show you how exactly this works so we can see what's coming up in the future. All right, so let's jump into it. You can see on my screen right here, this new report here shows that Producer Price Index skyrockets 10.8%. So the PPI, you might have heard of that number before. The PPI, Producer Price Index, is different than the Consumer Price Index. I'm going to show you that in a minute. Let's just look real quick at what this is saying. So it says right here that, remember, inflation supposedly peaked this spring. That's what they wanted us to believe. The Bureau of Labor Statistics blew up that fantasy again with its latest Producer Price Index, the PPP. Report this morning. So they blew it up because this is what's called a leading indicator. So you might have heard the term before. There's leading indicators and there's lagging indicators. Leading indicators tell us what's about to happen. Lagging indicators tell us what's already happened. CPI, the Consumer Price Index, which we just found out is again at another new record, a 40-year high, is a lagging indicator. It tells us what already happened. If you want to know what's going to happen, you need to look at the PPI. And so we're going to take a look at that. We can see that in May, the month-on-month increase in the price of goods jumped to 1.4%. Now, it says, in case anyone still wants to make a peak argument, such as in we've already seen peak inflation, consider a couple of points first. First, the month-on-month figure actually increased from last month, and not by just an insignificant amount. As a matter of fact, it jumped by a large amount. You can see this chart here on the screen and how it just continued to trend higher. Now, what's important to understand is it says here, bear in mind, too, that we are now making comparisons to months that had already begun to show significant inflation in 2021. So what does that mean? So they do a year over year. So we're looking at May 2022 versus May 2021. What's important to understand is that we already had significant inflation in May of 2021. So we got a 10% increase on top of a 10% increase. It says right here, making these figures even worse when compounding effects are taken into an account. So you take already bad numbers and add 10% to that, and then you add 10% again. So the 10% increase we saw this year is much bigger than the 10% increase we saw last year. Does that make sense? And we can see down here, the list of goods in the report is littered with double-digit percentage increases year on year. So food's up 13%, energy up 45%, insane. Capital investments, equipment, etc. Transportation, warehousing, 24%. Construction, 20%, on and on and on. Now, before I show you exactly what the relationship to PPI and CPI is and how this helps us tell the future, before I show you that, let me just show you what our dear leaders are saying. So here we have White House Press Secretary, the new one, Karen, I think it's Karine Jean-Pierre, says that basically we're in a really good historic economic situation. Let's go ahead and hear it directly from her mouth here.
So, first of all, the American Rescue Plan met the moment, and it has put us in a place where we can actually put us in a place where the American people feel can actually we can take on inflation. What I mean by that is we've seen growth, right, with as I mentioned, more than 8 million jobs, and now we're transitioning into a stable growth. The president actually wrote an op-ed to discuss that himself, lay out his plan on how we're going to bring down inflation, and so that's really important. In order to take this on, we got to have be in a good historic economic.
So the government, the President Biden wrote an op-ed. Do you believe that? Leave me a comment. Let me know if you believe the president wrote an op-ed, an opinion piece. I doubt the president can barely read his teleprompter. I doubt he's writing an opinion piece. Someone obviously wrote him for him. But what they're saying now is that the economy is in a very good place historically. And we believe that the economy is in such a good place that it can take on this inflation. So it's in a good place, as in the highest amount of debt we've ever had, 31 trillion. A good place as in the stocks are in the worst decline. The NASDAQ is in its worst decline almost since 2008 great financial crash. As if new home sales aren't slowing, as if costs aren't through the roof, as if personal savings rates are plunging, and the consumer sentiment is at the lowest level we've seen in decades. That's the good economic environment that we're in, supposedly, that can handle this inflation. You see this narrative shifting. All right, now let's jump back over into this for a second. So here we have German producer prices rising at the fastest pace on record. Why is this important? Well, Germany is the powerhouse of Europe. Germany basically has the biggest economy or the biggest producer base in Europe. And so when you see producer prices going up in Germany, you can understand what's going to happen in Europe. Now let's try this out before. This is the first time I've done this on a video, so bear with me here. I have my digital whiteboard up. So let me see if I can draw this out for you here. All right, here we go. Bear my crude drawings. So let's see here. All right, let's see if we got what am I trying to do here? All right, that's a snake. Now, you might know that snakes eat things like mice and rats and rabbits, and if a snake were to eat something, then we know what's going to come out back here, right? Does that make sense? Not being gross here, but if you've ever seen a snake eat a rabbit or something like that, you can literally see the bulge working its way through the snake, right? So when we have, the first thing that we have here is inputs. So we're going to call those commodities. All right. So when commodities like copper and steel and things like that go up, what does that tell us? So that means that the cost of the raw materials. So real quickly, we take raw materials, steel, silicon, copper, things like that, and then we turn that into products, and those products go to make more products, and those products go to make more products. So if the price of the commodities is going up, if that's going up, then that tells us that eventually we're going to have prices going up here, right? Then those commodities then go to someone who then turns those into raw materials. And then those, so we'll call that raw materials, right here. And then it goes to the producers. So this is the producer prices. We'll just call this PPI. All right. So now this rabbit is sitting right here. So the commodities went up in value, went up in price, and we can see the price of commodities going up like crazy. Then we see it get to the producers; their prices go up. Then those materials go over to here, which would be, let's say, like the manufacturers. Okay. Then it goes to here, which would be like the wholesalers. Okay. Then it goes over here, which would be like retailers. Okay. And then it comes out here, which is then CPI. Does that make sense? So when we see that the PPI right here, when we see that this PPI is going up, it tells us the future. It tells us that because this went up, we know this is going up, we know wholesale is going up, we know retail stores are going up, and eventually what you pay as a consumer, the price is going up. Do you understand now why CPI, when the CPI index goes up, that's a lagging indicator. It tells us that all these other prices have already gone up. So if you want to know where CPI is going to go, just look at the commodities, look at the PPI, look at the manufacturers, look at the wholesalers. And then eventually you'll see that your prices are going up. And so back to the title of this video, which is this data shows us that CPI, the price you're paying, is not going down. They can continue to tell you that, but that is not true. If the PPI is going up, then the CPI will be going up on top of it. Now, another thing to note real quickly, even if the CPI goes down, let's say it goes from 8.6 to 8.3 or 6.3 or 5.3, that doesn't mean the prices are coming back down. That means the increase at which they're going up is just happening a little bit slower. Does that make sense? Leave me a comment or a question down below. I've been making videos off of your questions. So if you have questions about this or any other question, leave it down below. I'm making videos on those if they get a lot of likes. So like those questions that you want to see answered. If you like this video, first subscribe to this channel, click on the subscribe button, leave me a thumbs up on this video if you like it. And if you don't like the video, you can dislike it. That's okay. But at least leave me a comment and let me know why. And that's what I got for you today, all right? To your success. I'm out. Since you've stayed to the end, I know you like this video, which means you're probably gonna really like this video right here and this video right here.